Yo, what is going on, everybody, and welcome back to another Mobetta trading video. Today, hopefully, well, now I know for sure that we got the audio working. I went and recorded a 45-minute video yesterday that I'm actually, in this moment, pretty annoyed that the volume was not recording. For whatever reason, the audio was not recording because what is happening on the charts right now, as you see, we got Bitcoin pulled up here. What is happening on the charts is exactly what I laid out in the video yesterday. And I know it's easy to just come on and say, oh, well, I laid the video out. I'm going to actually, in this video, I'm going to just put some clips of me actually going over what I was looking for on the setups. Even though there's not going to be audio, I just want y'all to see that I actually did call this move. I mean, really pretty perfectly. I'm not going to say I called it perfectly. There's no such thing as perfect in trading, but what we got today is exactly what I was looking for. So we got the push up. I believe yesterday we were sitting like around here. It could have been like here actually. But what I was looking for was a push into this wick, and either if we were going to continue bullish, the following day, we were going to need to close above this wick's high and then break above that to continue pushing up, or I was looking for a swing failure for price to reject this wick area and look to go short. Now, obviously, you see I had a short set up here earlier. This is at about 11 a.m. That is because I'm not going to lie, I overslept, and so I did not catch the beginning of this move, but this is exactly what I was looking for. And so we're just going to go into breaking down why that is. Simple price action, honestly. We had created support here, as you see. We had pushed up, much like over here, we pushed up, created some support here, broke down, boom. Pushed all the way back, created support right here, and then we broke through support and continued trading down. Now, what I said in the video yesterday and what I will reiterate is that one thing I didn't like about price as it was developing was the fact that we had a flat candle here. I mean, it's not flat, but pretty flat. This one is completely flat, had no wick on the bottom, right? And then we had a very long wick that just looked really weak to me. So what I was saying in the video is that I was in full belief and expectation that we were going to trade back down into this low at least to take the liquidity here. And I thought, well, we could push all the way through this this wick here and fill it all the way to the downside. However, I didn't think that it was actually necessary that we fill the entire wick, just because this is obviously an area of demand, as we've rejected here, we rejected here, we've obviously rejected here, and we continue to push up. So while I was expecting a push back down into this area and potentially a wick fill, I didn't know if we would get the entire wick fill or even get down to these lows over here. So this was at 77,300, 77,400 was about the area that I was looking for in order to, take shorts from this level, from this wick high, and take shorts back into this level. And as you see, as New York session opened, 8:30 a.m., boom, we got a slam below here, push back up, boom, close back below. Once we got the close down here, that really is your signal. This is your signal, right? This is why it's very important for candle closes, because if you had gotten in here, you would have actually got a great entry at the break of here, right? At the break of this low. But if you're impatient and you don't, trust your stop loss, you probably move your stop loss into break even, and then it comes to get stopped out, and then you get cold feet, and you're like, well, now I don't know what it's going to do. That's why this candle here, this 9 a.m. candle, was the better candle to take as your confirmation candle. And then at the break of that low, you could have taken it, down to 78,850, or potentially lower, at least down into this support level if you didn't think that this was going to get filled. However, my bias was that we were going to trade back down into this level, which we did. So I'm not going to, take too much time telling you, oh, well, this is exactly what I said. But I just wanted y'all to understand why these were areas that I was interested in seeing price trade back into, right? So with that being said, I'm just going to go ahead and get back into, we're going to go into the daily. We're going to do some top down analysis. Okay. So now we're on the daily. This is Monday's candle. This is Tuesday's candle. As we see here right now, we're just trading sideways, right? Essentially trading sideways. We have support that was created down here at 75,500. We now have resistance that was created on the higher time frame, right? We came and traded. We basically just retested the underside breakdown here. So this is just a bearish retest at this point. At this point, it does not mean that it will remain that way, but at this point, it was just a bearish retest where we price came back, tested the breakdown level before closing bullish, right? And so my bias was until or unless we close above 81,275, 81,300, we were not out of the woodworks, right? We still had bearish price action developing until we got to close above this area. Now the reason that is obviously because candle closes are where the bulk of the transactions are done. It's where the bulk of the volume is, and so until we can get a excuse me, until we can get a full body close above here, we cannot remain bullish, right? In that scenario that we failed this area, I told in the video, I said we should hold this level. If we were to break 74,670, then we would be looking to trade back down, and fill a lot of this inefficiency here. You can call it a fair value gap, inefficiency, whatever you want to call it. There's obviously a large area where there was no interaction from sellers. So this could be a potential area of interest if we break below here. Otherwise, we're just going to range. We're just going to go sideways. There's always team up, team down. There's never team sideways. Unless you're day trading, then team sideways really is amazing if you can get a good range, which we absolutely did. Monday's range gave us, a damn near $7,000 range, $6,500 range to trade within. And so far, that's exactly what we're doing. Okay, so we got support created down here. We got resistance created at 81,300, support created about 74,670, 600 area. Okay, that's on the daily. Now we drop into the 4 hour and we can refine that a little bit, right? So while this was the area where we wicked to, we started closing candles below. Once we started pushing up and we failed to close any higher and we started closing back below this wick, you can really anticipate, okay, once we get support to form and a break below support, if candles cannot close above this area, then you can expect that we're going to reject back down. And even look on the 4 hour, we got a flat candle down here. So it's very likely that we trade back into this 4 hour candle at 75,100. It's very likely. Okay. But so as you see, we got exhaustive candles starting to form, another candle, no wick. And then boom, we've got a bearish engulfing that engulfed the previous 4, 8, 12 hours of candles, right? 12 hours of price action. And right now, see, even this, okay, there's a very small wick there, but that's not very much range, right? So there's not a lot of range. So there was not a lot of opportunities for buyers to step in, even if they wanted to. So this could be something that, you look to trade back into later on. But as of right now, this is kind of just it's a really strong candle. So you don't want to fade. You don't want to fade strong candles at all, right? Just like you didn't want to fade necessarily this candle because it had such a huge wick. It did have a small body, but the momentum was still carrying it to the upside. You needed to see momentum fade before you were entering a trade. That's why, at the break and close below this support level here at 78,770, that was a great entry. It's a great entry because even though there is support here, there's a flat candle support, which is not very strong. And then below that is just kind of open air, right? So on the 1 hour, come down here. Now we're just kind of consolidating, right? We're printing dojis. We're unable to close below 76,500. That's not to say that we still won't, but at this point we're not closing any lower. So, It's 3 p.m. End of New York session is coming up, so it would be reckless to be taking trades at this point. It'd be reckless. Okay, so now what we're looking for, if we can get candles to continue closing like this, if we get a stronger close down towards this bottom, we could probably continue pushing lower. But if we get a candle to, during a high volume session, of course, it's a kind of a mute point until we get a high volume session. But in a high volume session, if we're able to get a candle to close like this, with the wick at the top here, then you could anticipate that we wick down and we continue to push up, even if it's just back into this resistance area here. Okay. Otherwise, you just want to wait for support to form. And if you're not comfortable taking longs, then you wait for that support to break. If you are comfortable taking longs, an impulse entry above 77,400 would be a good trade to take, good scalp trade to take in the short term. Okay. So drop down to the 30 minute. As you can see in the 30 minute, we have resistance here at 78,550. We have support being created on the 30 minute. Again, why you don't want to take the trade as it's pushing down below here, it's because we haven't had a strong close, right? Even this previous bearish 30-minute candle closed above the support area. We need a candle to close below 76,600. It needs to close below 76,600 in order to give us a higher probability that price will continue pushing down. And if prices were to continue pushing down, you've got about a $1,800 range, 2%, 2.5% range to push to the downside. Should we, again, during high volume time, and for me, high volume time is pre-London, London Open, pre-New York, New York Open, right? Those are the only sessions that I'm personally willing to trade, and predominantly is the New York Open. I feel like you just get the most moves out of the New York session, or the highest volume moves out of the New York session. Okay, and especially during New York London crossover. Okay, so we would need a high volume session to create a bullish candle to continue pushing us up towards this resistance area. Okay, if we were to get a bullish candle on support that breaks above these highs, we can anticipate that it's going to continue pushing up and retest 78,650. Otherwise, you'd want to see price come up and form a resistance, much like it did here. Form a resistance and then break that support area back down towards these lows and potentially lower. Right? So you'd want to see something that either looks like this, right? And we can get up here, and if we start failing, boom, you can take the short here. Or if price is just going to hang out here, you'd want to see it, break, retest, and then push down. Okay. Here is a no. You don't want to get in right here. Okay, because price has already made its move. Price has already moved down. It's already had its retracement, slight retracement, and it's until it breaks back below here and closes below here, there's no trade to take. Okay, on the short side, or until we get a double bounce, maybe something like this, you could look to go long, right? Until then, you just do nothing. All right, very simple. You keep it very simple. Just have simple support and resistance drawn out. Look for areas that are interesting to you and wait for price to develop in a way that gives you confidence that price is going to go your direction. All right. And that's not to say price will go your direction just because you get the setup that you see. But if you wait for the setup you want, it has a higher probability of going in the direction you want. Okay. This is all about probabilities. Nothing's guaranteed. The only thing that you can control in the market is how much money you lose. You can't control how much money you win. So you want to lose a little, win more often than you lose, and win bigger than you lose, right? And you can't do that if you're not waiting for high probability setups. So for me, I've already taken the trade. I took as price broke below here and closed, I then took the trade lower and exited really pretty good. Pretty good exit. Yeah. Okay, so that's Bitcoin right now, there's really nothing to do. Again, tomorrow are set to have retaliatory tariffs put in place. I believe, if I'm not mistaken, what I read earlier is that there has now been 104% tariffs placed on China. China is not backing down. China is not interested in negotiating. They are not willing to bow down to Trump, basically. So in a market that is this headline driven, you definitely don't want to be in the market outside of high volume times. And more so, you want to have your alerts set. You need to have a good source of news for whenever things like Trump tweets drop and send the market, flying to the upside or downside. It doesn't really matter. Trump tweeting at this point is the biggest catalyst for the markets, which is not necessarily, great, but it makes for some highly volatile moves that you can capture to the upside or the downside. All right. So yeah, as far as Bitcoin is concerned, there's really nothing to do here. I'm just waiting for price to develop more, give me more signal as to which direction it is wanting to go. And until then, I do nothing. All right. So that's on the 4 hour. Again, we could break these lows, continue pushing down, fill this gap down here, or fill that flat. Otherwise, we wait for some space to be created, some consolidation, some market structure, essentially, right? You want to wait for market structure, i.e. consolidation, and then figure out what price is going to do from there, whether we're going to revert the price or whether we're going to continue the downtrend. Okay, cool. All right, so now on ETH, man, ETH just, I told y'all, ETH is the most cancerous coin in all of crypto. Yeah. It just is. There's no other way to say it. ETH is kind of showing its hand here. We got some really strong movement to the downside. It looks like it really wants to continue filling lower at this point. But the same principles, right? Same principles as Bitcoin. We got support created here. Resistance created here. Excuse me. We have support created at about 1450. And until or unless we break below support here, which it looks like could be happening pretty soon. Until or unless we break below support and close below it, there's nothing to do. Now, if we break below this low, there's a very high probability that we continue and at least fill this wick to the downside. That's a 3% move. Okay? So 3% or $44 move, 400 pip move, however you want to look at it. Okay? Until that happens, you just sit and wait. All right? So this is a very strong area of support. This is on the 4 hour. On the daily, I'm not even going to, really waste time because we've already done our top down on Bitcoin. And essentially the levels are very similar on the rest of the market. While the price point may be different, the moves are similar. Okay. So on the 4 hour, again, we've got support here. We need to break through support if we're going to continue lower and fill this wick. On the 1 hour, you can see we're driving really hard into support and we're starting to kind of stall out. Now, that doesn't mean that we will stall out. As a matter of fact, even on the 1 hour, this looks like a really good area of support. We got a flat bottom candle. So, flat bottom candles or flat top candles typically tend to get retraced again. They typically tend to be touched. No diddy. Okay. But until that happens, this is the support that is being created. If we drop down to 30 minute, this is on the 1 hour. Drop down to 30 minute. We got support being created here. Obviously, price is rejected. It's moved away. And until we get price to break below 1457, there's no trade to take. And then it's up to you to decide whether this is a trade that is worth you taking. Right? I'm not going to tell you whether it's worth it or not because I don't know whether it's worth it or not for you. For me, not really. For me, it's not really worth it. I'd rather see price develop and reclaim and create some bullish market structure down here. But if not, we'll adjust accordingly. We are in an overall downtrend, so any bullish takes at this point are counter trend trading. which if you are not an expert in counter trend trading, if you're not an expert in support and resistance, then you should not be counter trend trading. You should just be looking to trade with the trend. Okay, and the trend right now is clearly down. So, yeah. All right, so that's on the 30-minute. Again, we got support created here. If we can get a break and a close below here, we can push down towards 1430 and possibly lower to fill the wick towards 1410. Otherwise, we just wait. Wait for price to develop differently. Okay. All right, so now we're going to go to Solana. I'm going to keep this very brief because, man, look at this. This is beautiful. I hope y'all can see this. Like, these consolidations are actually, they're actually beautiful and they're very easy to trade, right? You had consolidation here. Once consolidation broke, you can move it to the downside all the way back into support. Created a bullish candle at support and then continue to move back up into resistance. Rejected, tried to push price again, rejected again, broke support, and you could have traded that all the way back down to here into this flat candle, fill this wick maybe, and potentially down into $96 again. And that's kind of the direction it looks like it's headed, right? On the 4-hour, you can see how that looks. Right, we had consolidation, had the push up, rejection. Again, we had 3 a.m. The 3 a.m. So London session, we had a bullish candle that wicked up, could not close above any of these previous candles, rejected, and is now just continue moving down. Okay, so when price is telling you what it wants to do, you should listen. And it's being very, very clear right now that once it's getting the resistance levels of obvious resistance, is rejecting. Once it's getting to areas of obvious support, it is rejecting bullishly. So until that changes, it's an in and out market in my opinion. This is a trader's market. This is a scalper's market. This is not a buy and holders market. You don't want to be buying and holding. You don't even want to be selling and holding at this point because we've moved down so much. Selling and holding is really not favorable in my opinion. That's just my opinion. Everybody sees it differently, but that's how I'm viewing the market right now. In and out quickly, make your money, make your profits, get out of the market and stay out until something further develops. Okay, so on the 1 hour again, we have support being respected here for now. On 30-minute, support being respected here for now. Okay, now if we were to get a bullish candle, say this candle were to finish bullish and then the next candle wicks down and then breaks back above this bullish high, then you could expect to take it, into resistance. This would be the first area of resistance as we've obviously rejected from there. Otherwise, you'd be looking for something like this to break down, form support, and come lower. Maybe take these lows here. Maybe it only takes this low. Maybe it comes all the way down. Just have to monitor it as it happens. Okay? Cool. And then finally, we'll go into XRP. XRP, much like everything else, again, the market moves as Bitcoin moves. So what Bitcoin does, the rest of the market typically does. We had XRP crash below support, was unable to close below this previous support level, closed all the way back up here at about $1.89, still a bearish close. And then price was unable to break this high, so it respected the highs and is now continuing to push lower. So we got support here, or we got resistance here, again, we have support down here at about $1.60, $1.61 on the 4 hour. You can move this up a little bit. Boom, we got some support right around this $1.67 area. Resistance has formed at the $2 area, and now we have broken through this support on the 4 hour, as y'all can see, right? We had candle starting to exhaust, bearish candle, at London open, pushed up but could not close above this wick, and then New York just has been selling off ever since. So now we have closed below this area of support. Okay. And so if we break this 4-hour candle's low, there's a high probability that we should continue pushing down. If you go on to the 1 hour, that should probably be reflected. Should be reflected in 1 hour price action. Okay. So again, we've closed below this support. Excuse my dog's barking. We've closed below this support and now are making our way down. Could easily come and take these lows here. These look like very weak lows, very weak wicks. But you just need to see it push through and continue down. Okay. That would be your short scenario. Otherwise, you'd want to see price regain this level, hold it, and then, take it back up to here, possibly back up to here. We'd have to see how price develops at that moment. But right now, you just do nothing, in my opinion. All right. It's very easy, man. You just, the best thing that you can do is make trading easy on yourself. Make your rules easy on itself, right? Make it a no-brainer. You want to see price develop in a no-brainer way in order for you to enter. Like, you want price to be like, okay, the way it's developing right now, it would be ridiculous of me to not take the trade. If you don't get that feeling, and I'm not talking about your euphoric feeling or your gambling addiction feeling, right? Not the feeling of, oh man, I need to be in this trade because it could go my direction. You need to wait for price to be like, okay, at this point, price has done exactly what I want. It's set up exactly the way I want. It looks exactly the way I want. And if I don't take this trade, it's irresponsible of me and my strategy. Okay? That's how I look at it. Right? It needs to make me feel like it would be irresponsible of me to not take the trade. If I don't feel that way, I don't take the trade. Period. Okay? So, yeah. Until we get a close below here to push down lower, or a close above, like $1.87, or if we get, some bullish candles to develop on this area of support, or maybe down here at these areas of support, I'm not looking to enter the trade. And me personally, I'm not looking to enter at all anyway until New York Open. So, all right. Again, I don't want to hold y'all too long. It's very simple. Keep it very, very easy, very actionable. And just wait for price to develop the way that you want to see it, right? Wait for it to develop the way that you want to see it. And if it isn't developing the way that you want to see it, then don't be in the market. All right. Okay, cool. I'm not going to hold y'all too much longer. That's going to do it for me. If y'all enjoyed this video, please do me a favor, hit that thumbs up. If you aren't already, subscribe to the channel if you enjoy this type of price action breakdown. If there's anything y'all want clarified, anything that could be simplified even more for you, let me know, and I will do my best in subsequent videos to address those things, the comments that y'all leave. Leave me a comment, period, for whatever reason. Just say hi, just say what's up, whether you're enjoying the content, whether you think it could be improved in some way. Let me know. I love constructive criticism. I'm all for the feedback. At the end of the day, I'm trying to help everybody simplify their strategy to become profitable in the easiest and most efficient way possible. All right. So cool. Until next time, we'll probably wait until we'll see how tomorrow goes with all the tariffs and everything like that. I would anticipate it's not going to be good for markets, depending on what China says. If they're not willing to negotiate, it'll probably be pretty brutal. If there are negotiations in place, if Trump comes out and tweets that there's nations negotiating, we could get some relief, right? But until anything like that happens, I'm just sitting and I'm observing. Sitting and observing. It's my favorite thing to do outside of, being in the trade for a few minutes. Sitting and observing is the best thing to do, because not only does it allow you to, refine your strategy, it allows you to see whether you were thinking the correct thing without having to actually put money or risk on the line. That way, when you do see something that you are very sure of or you believe is a high probability setup, you do not hesitate to execute. All right, cool. Anyways, thank you guys for attending. We will be back either Wednesday or Thursday. We'll see. We'll kind of just monitor the market, see how it goes. But until then, I'll catch y'all next time. Peace.